These videos are not financial advices. Everything shared here is simply what I'm personally doing, and it's provided for educational purposes only. Hello everyone, and welcome back to another trading session. Today we'll take a couple of trades, and I will try to explain every single trade. I'll try to take 5 trades, and it's been pretty long time since my last session, and I took a pretty good break of the previous challenge. And all right, I'm gonna just mark this one. Wait. Yeah, we're done with that challenge, and now we're free to take like a 5 trade per session. This is a supply which caused the breakout. Okay, and now you see this is a third touch breakout, first touch, second touch, and the third touch breakout. But I wouldn't even take this because it's not good. And then we have this decision point which caused a breakout, just like this one. Okay, if you look, this is the same kind of thing. I'll wait for this one, and also I will look for other pairs to see if there's any other opportunity. All right, the price is reacting from the QM here. See, price is reacting from QM, so I could probably take this QM. We should have entry somewhere here, but we have missed it. I'll need to again, price is reacting from QM, high, low, high, high, low, low, and then it's reacting from QM. The market is not that bad because we have, I'm sorry, we have also this decision point that it worked, this one, and then it reacted from the QM. See, this is a decision point, right? Respected resistance, broken, next time price react from the decision point, and then it touches this QM right here, and then comes down. Now price in a ranging mode because we are in this range and price hasn't decided if it's gonna drop like this or go up. So I will try to trust this doji right here. I'll wait for this breakout. All right, I want to take, oh shit, I mean, my entry's unbelievably bad. Come on, all right. I got 3 trades on this one. Yeah, I mean, this entry's crazy. So basically, when we have a doji, right? I can't believe this entry is also a winning trade, man. Oh my god. All right. So let me explain you what's going on in this market, okay? I'll show you. Let this trade close. All right. Oh, we have a gap down. Should I take this? Let me take it. Yeah, I took this one as well. All right. So what's going on in this market? This is a big QM. Okay. And then other than this QM, I want to mark everything. Okay. What is this? This is an order block. Okay. And other than that, we have also this little decision point. And then we have another QM, which is this one. We have other QM here as well. This one. This is another QM and also another QM down here. Okay, now see how market moves. Okay, that the last trade was a losing trade. It keeps switching between supply and demand, support and resistance, and the setups itself. What is this? This is a demand, right? This is another QM. Wait, let me mark this one as well, which didn't work. You don't know, maybe it reacted from this. Anyways, so market comes up, creates decision points, QMs and stuff like that, and then it reacts. So first QM, see, it reacted a little bit and then it broke it. Next time, again, reacted from the same place. You know, when we have a failed QM, next time price touched the failed QM can give us a rejection. And then after that, we already created this QM. Okay, it reacted from this QM, and then after reacting from that QM, it created another QM right inside of it. Okay, and then it reacted from that one as well. And then we have another QM down here, which price never touched. And then this respected resistance. See, respected resistance, rejected. Respected resistance is usually a zone. Okay, this is another QM, by the way. See, full of QM, this market. Respected resistance is broken right here. So the decision has made here. Where? Inside this demand right here. Market reacted from it. Okay. Look, what is this? First, second, third. Third touch breakout, right? Gap down, closing on a decision point. So is this another opportunity? Yes, we could take this. But you know, what is the risky thing about this? It's momentum coming down, even though we have gap down, right? And then it goes up and touches this QM again. It comes down. There's nothing right here. It can stop it. We have a demand right here. Okay. So I took two trades on this one. This candle. And it's closing on a doji range. We have doji here. This is a doji. Doji has support and resistance itself. This is the resistance of doji. This is the support and doji. When we break this, we get retracement. When we close on it, we can get retracement. The next candle. But closing on it like this, it closed on it right here. Should be combined with something. In this case, we have the round number here. Closing on a round number at the same time that it closes on this doji. Okay? So that's why I took this trade. Alright, now it's breaking the doji from the upside. And normally this can give us a retracement. And I didn't take this one. It's touching this order block as well. It's kind of a good opportunity. I would keep looking for other pairs. So, did you really see how market moves? Like this, it keeps switching between support and resistance, switching between supply and demand, switching between decision points. And then inside that movement, for example, it touched this QM and it's going up. And then you see that it already touched the QM. There's also a demand. So you can tell that it's bullish, right? And then you see this little doji here. It breaks it from the downside and you know that it's bullish. You take this trade and you win in the direction of the trend. Okay? That's how you really analyze the market. Sometimes you go to the charts and you never see those kind of setups and the pairs. You see empty pairs with no setups. And that's when you know that market is just moving randomly. You shouldn't trade on that particular time. Okay? Oh shit. This is a trade I marked at the beginning of this video. And I said that this is this kind of trade. See? Supply causing breakout. But as always, I missed it. Okay? I marked it, but I missed it to take. And I don't know why I don't use fucking timers. I can put timers like this. I keep forgetting, bro. Keep forgetting. I know in the comments people will say, use timers, use timers. Yeah, bro, I keep forgetting. All right. I want to take this buy right here. This is a very interesting trade. It looks like garbage, but it's pretty cool. If you look, beauty. Okay, we have a bunch of rejections here. Now we're in a small range, right? Right at the middle, we have a little doji, previously respected, and now we broke it again, and it's combined with this common point of rejection. Common point of rejection is when we have a range with full of rejections from ups and downs, we can draw a line, getting the most rejections we can, touching the line, and that line becomes our common point of rejection. The common line of rejection, or common point of rejection. All right, let me tell you something. Oh shit, we broke the doji again from the upside, and this could be takeable. Anyways, let me tell you something about trading itself. Okay, there's a truth in trading. You know that when it comes to trading, most people, they just gonna lose money, right? And everyone knows this. This is just how it's designed. This is how the companies, the brokers, this is how it's supposed to be. Okay? It's been never easy to make money in trading. In Forex, in binary, in options, in everything. Okay? What do we do here? What are we doing here? Is we have different reasons to take our trade. This is a profession that we need to increase our probability. That's all we can do if we want to be profitable. And in binary, in this style of trading, what I do is I try to combine different concepts and then take my trade. I don't go to the charts and take all the gaps, gap ups or gap downs, and then complain that, oh, why the winning ratio is so low? I'm taking all the gaps. Bro, why do you expect it should be high? Because everybody can see the gaps, everybody can take them. So if everybody's supposed to make money with only gaps, then all these freaking companies would be bankrupt. So only certain people can make money in trading that really understand this. Okay, for example here, look, first, second, third touch breakout happened here. So if you see, there's not any gap, so we don't have any gap. Okay, that's not a negative or positive reason. If it was a gap up, it would be another confirmation. And then after that, if you look, you'll see that in the last 14, 15 candles, market kept creating double green candles, green, green, and then red. Green, green, and then red. So same thing happens here. This is another confirmation to take your trade. But if there wasn't any confirmation, normally taking this trade would give you a 50% winning ratio. That's how it works in the last 100 years. All the markets works the same. Because it's supposed to be like that. And even if we don't talk about trading itself, it should talk about any, like something else. For example, starting a business, right? A physical business. If you go check these statistics, you'll see that out of 10 businesses, 10 new businesses that people launch, 9 of them fails and only 1 of them becomes successful. That's called 10% winning ratio. Okay? If like 10 people launch business, 1 of them is going to be successful based on the statistics. So how do you expect the from 10 traders to all of them will be profitable. It's same for traders. Like 10 traders, maybe 2 or 1 of them is going to be profitable. That's just how it works. 9 or 8 of them will be the complainers, the ones who give up, the ones who think that this is not for them, and they might be right. Okay, because, you know, okay, this is a demand. And this is, and look, literally on the live chart, right? What is this? This is an order block. You already know. If you're new, I think new people are gonna suffer from watching my videos because they're gonna have no idea what QM is, what order block is, what decision point is. But I will give you a brief explanation. So order block is the last candle before. Okay, this is also order block. This is the order block, right? So before fair value gap, this is the fair value gap, right? Fair value gap. Order block is same as supply and demand. Market reacts from it. Maybe sometimes if the order block looks clear, you can go lower time frame and find entries in lower time frame and take your trade and win. All right, let me just take a buy right here, right? If I take a buy right here, it would be random, right? So I couldn't expect to win. See, I didn't take my, I will take my trade where? On this area. If it gives me the chance. Let me bring this down because it doesn't let me draw more of these. Okay, I'll make this red. Alright. See, if I was taking this trade, I would probably lose it right away because there's no other setups. And now it's going to embarrass me and give us a green candle. I know that it always happens. But yeah, we never trade based on one thing. For example, if I take my trade on this entry, it would be combining it. Alright. Now, I'm not going to take this one as well because we have gap up against us. So we need setup. And then we need to optimize our entry in most cases. If we have a setup already, okay? Now, market is coming from this order block. And there's not any good demand down here, something that causes something. For example, this one is kind of good down here because it's causing to significant breakout. This one is also good. See how it reacted? It's causing a breakout, you know, it's causing significant breakouts. All right, I'll keep looking. The percentages has dropped. So let me know in the comments if you like these kind of videos, long videos. I'm going to take this trade. All right. This kind of looks good, but if you want me to be honest, we have a little bit of lack of concept here because this is a doji break. Previously, previous candle created higher high. We see inverted hammer. We see sign of reversals, and we could expect a double bottom here. And then we have this candle. So this candle comes from nowhere. I don't know why this candle formed here because we had everything to go up. Even seeing this candle, I'm still at the same concept that this could be a double bottom and go up because it's breaking this doji. It's not even creating a lower low. See, this is the previous low, right? If you look at this in the lower time frame, breaking a doji, this one also will look like a double bottom. Let's see. This one. This is the doji break, and this is the trade we took, right? These couple candles. This is itself also is the double bottom. That's why I took this. Small movements of the candles also important. For example, if you look at this in the lower time frame, it will look like this. It's a price channel, right? That's the reality. That's when we take common point of rejection. This is a common point of rejection, and then if you look at the lower time frame, it would be like this, taking a price channel resistance. Anyways, this was 55%. I don't know why the percentages drop as soon as I take my trade on. That's crazy. Fuck. Anyways, I took 5 trades and the percentages is crazy. Alright. Thank you for watching, everyone. I hope you enjoyed, and peace out.